What is up, everybody? Welcome to Money Market Truths. I am Mark, and this is
Mo from OTB Clubhouse.
And Mo already had the charts up. He was ready to go. Let's give it a few more minutes. Let people to come into this chat room real quick. Make sure we are live online. Give me 1 second so I could double check.
Yeah, we're online, bro. So how was your day today?
It was good, man. It's good. While people are coming in, let's talk about the election real quick. Have you been following it? I know you're Canadian, so you probably don't care about the election here in America.
I don't care.
You don't care? Oh, okay. Well, I'll just tell you what my thoughts were on it. You know the difference between like Republican and Democrat out here, right? Yeah, man. So I guess the perception initially was it's supposed to be this. Well, depending what side you're on, right? I kind of listened to both sides of the news, but we were expecting a big red wave, meaning that Republicans were going to take over, and it wasn't as aggressive as they hoped. It was very interesting how some stuff played out. Now, of course, Florida, DeSantis won. Like that was kind of a given. I didn't see him really struggling, but there were three other ones that people were really eyeing. It was Stacey Abrams, which lost again. Fetterman versus Dr. Oz. You know who Dr. Oz is?
Yeah.
Yeah, so he was running against Fetterman, which had a stroke early on this year. So his speech and everything, he's basically like Biden 2.0, unfortunately. Like he's not in good condition. His cognitive abilities are not completely there. So I thought it was cruel that they kept pushing him to continue to run. He didn't do very well on majority of the debates and any interviews because he just had a stroke. So I was kind of shocked to see that he ended up actually winning, it looks like. And then the other one was Arizona, which was Kelly Lake. She ended up, I'm not sure if the results are completely out yet, but she was behind last time I checked. And then, of course, the football player Herschel Walker did better than I expected because I didn't think he was going to win or even get close to winning, but they're like, I think maybe a runoff with them. So it was very interesting. The Republicans definitely took Congress, so they definitely got that. It's the Senate that everyone's right now fighting over. So we'll see what happens. But if the Senate remains Democratic and the Congress remains Republican, what that basically means, Mo, is that nothing's going to pass.
Yeah.
So nothing is like they're not going to come to an agreement on anything. It's going to be constant fights. Literally nothing is going to pass. That's why sometimes it's better if you have the same party in both. It's not supposed to be like that, but it's just how this country runs for some reason. So yeah, so we'll see. There's still some more information coming in on a daily basis. So we'll see. I think the whole system here is kind of archaic how they do voting. So how do they do it in Canada? Do you guys use like a app, or do you guys actually go in and do mail-in ballots and physically vote?
Well, we usually get mail-in ballots, and then we actually have to go. And there's usually a place set up for each city. So mine was like 5 minutes away from my house. So they're pretty close by. And
okay, so you guys don't have like an app or anything?
No. And maybe there is, but remember last time I had to physically go. But I don't know if that's the same case in US, but we actually can take time off. Like if you're working, you can actually take time off to go vote, and legally they're required to let you go for 4 hours.
Some jobs do that, not everywhere, but it just kind of depends. I know my job, they were like, hey, if you need to go vote, just go ahead and vote. So we'll see. The funny thing is, though, dude, like DeSantis, again, that's the Florida guy, right? Trump bashed him, dude, a couple of days prior, which is an indication that it looks like Trump may run and DeSantis may run. And they're gonna head on. That's gonna be very interesting. Because DeSantis was Trump's boy when Trump was in office, but now he's giving him these little low blows here and there, which means that DeSantis is probably going to run for presidency in 2024, and Trump's trying to, prep the stage for that. But I think that may actually backfire because I know the news always says like, people don't like DeSantis, CNN and stuff, but here in Florida, if people should go look at how he completely won. It wasn't even like it was a landslide win, dude. He won. Democrats and Republicans like him here in Florida. So if he ends up running, there may be a chance. I don't know. We'll see. I prefer him over Trump for sure. So, but yeah, man. So let's see how many people are in the room. All right, let's get into it, Mo. What do you got? So everyone, first of all, thank you for joining. If you haven't done so yet, if you're brand new, please subscribe. I'm going to make a little announcement here quick, but Mo has a lot of stuff that he wants to go over to help everybody. And then at the end, if you guys are interested, if you want any sort of levels or anything for price targets to enter, remember we are in a bear territory. I still think there's a lot of pain to come, but I've been doing pretty damn good with these charts and technicals to like figure out good areas to buy in. I've pretty much hit almost every single one I put on Twitter has hit so far. So I'm proud of myself, man. So it shows that I've learned a lot these past 2 years. But yeah, all right, Mo, go for it. All yours.
Well, so I want to start with a serious note, and the note is I don't know if you guys know what happened with FTX today, and we had a big crypto collapse. And I just saw a statement come from Sam, who's the CEO of FTX. It's a brokerage for crypto, and he said they're short $8 billion, and if they don't get the funding, they will go bankrupt. And if that happens, innocent people that just had their money sitting there, they'll lose the money. And I don't think they do get a bailout because Binance just said a big no, which makes sense because they're a business, but I don't think the government backs them up either because it's the early adopters that were in crypto. Believe it or not, there's a lot of people that still have no clue what happened with crypto. And even they might hold something, they'll realize late that they've either lost it completely or they're down a whole lot. The reason why we talk about this is because the space that we're in, and I'll specifically say, me and Mark both interact with a large audience. Majority of that audience is minority. So most of it is overlapped. And there is a thing where they talk about, hey, make sure you buy the tip. Stuff is on sale. And then the third thing that they use a lot is do it for the culture, or they're stopping us to buy this stuff because they don't want us to know. Most of that is garbage, and that's like an emotional appeal to build trust with you guys. And there's nothing more to that. If I'm charging you for a product or a service, it has nothing to do with the culture. It's just me being a business, and I've been very upfront about that. So be very careful because I'm seeing again a wave of people just BSing. And I'll give you an example. 6 months ago, they were saying, when I say they, I mean big influencers, people with big Discord groups, and they were saying buy Walmart, buy Target, when it was 155, 160, because stuff goes up in recession. They're all down right now. Then they said buy alcohol because alcohol goes down in recession. Look at ticker symbol SAM. It's down, I think, 40, 50% as well. The point being is people who've never traded more than 2 years look at 2008, and that's their blueprint for recession. We're in a completely different environment. Today, this morning, me and Mark talk a lot about, how do we get more people educated? And again, there's no paywall behind this. So we talk about this all the time. How do we educate more people? So we were like, we need to do more lives. This morning, I went on a live, and the person on the live, specifically, their language was, banks are the best investment right now. And the logic is, high interest rate means more money for banks. So, Mark, what do you think about that statement?
So, no, I would say I would disagree on that. I understand maybe the concept of it, the reason why people would think that banks would be a good investment during high interest rates because banks make more money with higher interest rates. But when the interest rates go up higher like that, less people get approved for loans, and it's harder for people to borrow, and they're more nervous about who they borrow to. So I don't really see that retail person going out there to try to get a loan right now at this high interest rate. It just doesn't make sense to me.
So, anyone that's pro this statement, feel free to comment and give your explanation because we want to have a healthy argument. We had the same thing when we had Mark in our episode. We wanted his thesis on why he was bullish. By the way, Tesla getting to 150 pretty close. We've been saying that for Mark, how long? 6 months now?
Do 6 months. Yeah. Honestly, hey, just breaking news. My demand zone was 188 to, I think it was 192 or something like that. I did buy one share at 188 because typically when I have my demand zones, I usually promise myself I will buy it at the bottom of it. But yes, we said 150. Mine was 165. I think yours was like 150 and even lower. You said once it breaks 150.
My new goal is 100 for Tesla, potentially 65 if things get worse. And it's not because I'm like a negative person and I think the world's going to burn. If you were trading with me 2020, we had outrageous target. We thought NIO was going to 100. Coin was going to 500. Like, it depends on where the trend is going, and when the trend changes, you change too. But let me quickly share something with you guys. So this is JP Morgan, and this is November 8th. So this was this was in November 8th, but there's one that came on November 8th too. This is a little bit old, but I'm going to quickly share this with you. All right, so the layoff come 2 months after Wells Fargo reportedly announced it will lay off home mortgage employees. Real estate brokerages Compass will lay off 10% of its workforce, 450 employees, and Redfin announces layoff 6% of its staff, 470 employees. November 8th, which was yesterday, Goldman Sachs said they are also doing a layoff for their mortgage employees because they're seeing demand for mortgages go down. So if we quickly look at Goldman Sachs and how they make money, 14.2 billion of their money comes with investment banking fee. The rest you can break down and look at it, but that's not what my interest is. My interest about the investment banking side. If the mortgages are down and if people aren't qualifying, what do you think the banks are doing? They are going to lay off people. And so if they're laying off people, how do you say that high interest rate means that the banks will make more money? So that is one of the scariest logic that I don't want people to fall into. And we're at the same place. The next biggest hit is going to be real estate. If you guys just don't listen to me, go on, just Google Airbnb demand, you are going to see that most places that have an occupancy rate of 70 or 80% have gone down to 50 and 30%. Most builders aren't building, which means stores like Home Depot and a couple other that you have US or the builder ones, they are going to see less demand. So real estate sector will get hit the most. Now, we talk about institutional investors, we talk about Goldman Sachs. They also buy real estate, and the stuff that they buy usually never go on market for sale, so they usually use it for rent. Their prices are also going to go down, and they borrow against that. So no sector except energy has looked good, and energy is going up because of what's happened with inflation and with the trade war and the countries just having sanctions at each other, basically US doing what it's doing with Russia and China. So this is more so I'm right, the other person's wrong. It's more so people with zero accountability often will tell you to buy the dip because literally they have no stop loss or no way to know they're wrong. If, for instance, Pablo comes in and Pablo goes, we've done enough. We're going to go quantitative easing, and Tesla is at 165. Mark, what would you do?
At 165 I still wouldn't. Oh no, I wouldn't touch it. Still at
But he's
165.
saying he's going to do quantitative easing, meaning their Fed's going to start buying. What would you do?
Yeah, I mean, it would.
You would change your thesis, right?
Yeah, I would change my thesis. I don't know. Yeah, I would have to really consider, because obviously when that is quantitative tightening and there's quantitative easing, right? So when they're easing, they're obviously taking the foot off the they're taking the foot off the brakes, right?
And they're buying.
And they're buying. So obviously there's going to be a massive rally. But
so Mark, the whole point is we've ride the trend. We're not making the trend. We're not defining stuff saying that if Tesla doesn't hit 150, I'm wrong, or I'm right. I'm gonna hold. Like, there's no stubbornness. You move with the stock, right? So if there's QE, yes, you buy, and everyone that's commenting, you guys understand this. But my biggest scare is just you see Goldman Sachs already at 365. People start buying, and then I see people tweeting about crypto. So let me ask you a quick question, if anyone can answer. Most of the stocks are going back to their pre-pandemic prices. Can anyone tell me Ethereum's pre-pandemic price?
Yeah, while they're doing that, real quick too, Mo, the reason why I was hesitant to answer in this one, because I remember my financial advisor, right, when he was dealing with money, we had his class, and he was explaining that when quantitative easing happened, right, obviously everything just went up like crazy. everyone was buying. But at a certain extent, he started to stop buying and start selling, right? Because once everyone gets greedy, you need to start being nervous. And I feel like a lot of us didn't sell at the top because we were still in that greedy phase and then end up holding the bag where we could have taken profits. So even though quantitative easing would happen, you're absolutely right. There will be a massive run. But at what extent do you start thinking about maybe this is too much?
So the only time, if you like, Powell basically said that they'd rather do QT excessively than do stop it prematurely. So whenever they actually do QE, it's going to be a long-term reversal. That's the only, unless they just massively fuck up. So if I see QE, I will blindly start buying the stuff that I've written down, and it won't matter the prices. And same thing. So my target for Tesla is 150. And one of the big pension funds capitulate, right? And it goes to 140. I will just wait for it to go down 130, 120. So I don't have any limit prices. So let's go look. We have one price, 125. Let's go.
125. Yeah.
So let's go.
I think Danny Sanders, I think are you referring to he said Ethereum. Is she talking about, or is he talking about he or she? Sorry, I don't know who you are. Are you talking about Bitcoin maybe? Is that what you're referring to? At 4,600?
Yeah, I think he's talking about. So yeah, 125 is the correct answer for pre-pandemic. So let me ask you this. So if you've been buying it at 25, 1200, if it goes down to 125, how you'd be down around 80%, even if you bought it at 1,000. So dollar cost averaging, no problem. I've never been against it. And me and Mark talk about I'm talking about people just going in bulk. So a lot of people are sitting on cash. So throw 40K at, and let's say you only have 100K allocated for crypto. So you say, I'll take 40K or 50K into it. You're going to be down around 70%. So that part, be careful. If you're dollar cost averaging, which means you're making 5K a month and 1,000 if that is going into different asset classes based on what you want, that's completely different. I wouldn't have recommended that in January, March. Now it's okay, but let me show you Tesla pre-pandemic price, and that's what's scary.
Oh,
and
wasn't it like $56, $60, something like that?
Bro, I think it's 65 when I was checking, which is it could possibly go there. After Powell made that statement, I'm a believer that it likely goes there, and it takes out a lot of people. It is so in 20th of March, or if you want to look at Feb 61, I think 61, sorry, 65.84. I think this is a lot more reasonable here. It could see that, guys. It could completely see that. And we had Mark, and his question was, what's the thesis? How do you think, Mark Monroe, what's your thesis of it going down? The thesis could be macro. It could also be that Tesla's paying a lot of attention on Twitter right now, that Elon is. And another thing is, I haven't seen Tesla's balance sheet. Maybe you know, Mark. I don't know how much crypto they're holding, Bitcoin they're holding. I know they're holding a large quantity still, which should be down a whole lot as well.
I think they got rid of some of it, but I mean, you guys can fact check me. Again, I'm not the biggest Tesla fan. I only just bought one share because I owe so much stuff I would. But everything, like you said, I mean, we covered all the red flags. And I know every time when I do a video, even on my personal channel, or if I talk about Tesla, everyone keeps saying you're smoking crack. They said I was smoking crack when it was at 300, and I said I was going to go to 205 and went to 205. I said it's going to go to 188. They said I'm smoking crack, went to 188. Now we're saying I'm saying 165. You're saying lower. I think 165 is probably going to hit before the end of the year. The thing is, my biggest red flag, like I always said, was it's Elon Musk. That's the first and foremost the red flag. The dude is a ticking time bomb. And I think this really showed it. I know the reason why it went down is because he sold a whole bunch of shares. I understand that. But he's losing this popularity contest now with all the Twitter stuff, in my opinion.
So if you look at it, because I know you do this a lot with your chart. So I have nothing really till 136. Then I have 95. Then I have 62. Just so you guys know, let me just talk quickly, Flo. There is a very big buyer that came in for puts, and they hit April 100 puts for Tesla. Apart from that, there is a January 150 guy. So it's all coming. So anything you want to add to Tesla, and we'll move on.
No, you know what? Let me see if I can pull up let me see if I still have all my notes and stuff so I could share, because I didn't do it last time when we had Mark on, because we didn't really get to talk too much. I mean, we did talk about Tesla, but I didn't bring up my chart to show. Do I have all my information still on here? Because I would like to share this with the audience if possible. Let me go to the monthly and see if I still have it. Give me 1 second so I can share it. That way people can see it. Hold on.
So every month, I usually get 4 or 5 messages from friends and family members who know what I'm doing. They'll always be like, "Can I buy Tesla now?" I'm like, "You could buy whatever you want when you want, but I think it can go lower." I know people were buying NEO on the dips, and I think I would just stay away from China, regardless of how cheap or expensive it can get. It's just not a place. I'll move on to quickly Goldman Sachs, and we'll come back to Tesla with Mark.
Yeah.
So
Okay.
this is the chart for. Let me just delete these alerts that I have. And so I usually never cover the macro part, and I did today because it's important for you to know why. Because look, if you look at, so this is a weekly chart, so every candle represents a week. So short term, we had a downturn and we went up. So if I'm gonna quickly do a Fibonacci on it for people that don't know what it is, just think of it a mathematical formula that covers retracement and all that. So this is quick and easy on GS. And I'm doing this in front of you. I did not plan this. If you look at it, this is such a strong chart. It went to 276, bounced back, failed on the 50th percentile, which is very normal. And then it dipped below only to recover back 362. So in the last 3 weeks, it's gone from 305 all the way to 362. If it crosses 415, most likely it could see 600. That's how Fibonacci. I'm not saying that's what happened, but that's how Fibonacci works. But do you see how it rejected right here? Coincidentally,
Yep.
yesterday and today, all day, all I saw was puts on GS, puts on WFC. So the level that you want to watch out for is 329. If we fail, I'm already in BAC puts, the 38s. And I'm also looking at WFC because WFC has a lot of investment in real estate. So that they got that going for you. You don't know how much of these banks have investment in China and Russia. So if something happened with China and Russia more, they can get in a lot of trouble. All right. So I'm already in puts. I think we can possibly see 300 by probably end of this year. So I would be very careful. And that's a pretty big drop on banks. That's about a 25% drop of bank from here to I'd say end of the year. That's what's been happening with Tesla. That's what's happening with Apple. They're hitting Apple 120s. They're hitting Microsoft 200s. Microsoft, they hit. I forgot to message you today. So Microsoft has 20 million inputs that came in today.
Yeah, I saw that for April, right? Or February. It was February. Yep.
Yeah.
I got the chart if we want to share it here real quick.
Share it? Go ahead.
Yeah, I'm gonna show you guys. And literally, I made this chart back in June. And this is a chart that I've been sharing with everybody. And you can see I have a lot of stuff written here, right? And again, I made this in June, hence the reason why I had the resistance level here at 297. Because if you guys recall, remember how Tesla couldn't get above 300 and hold for very long? It's because of this. And then the next demand zone I had, which was 227 and 251, it broke that. It was on a weekly. And then what I had was the 188 to 207. The reason why I bought the 188, because that was the level that I was willing to buy one share just so my wife can leave me alone. And it broke below that. And I had the next key level at it was basically 165-ish. Yeah, 165-ish. And then after that, if that support doesn't hold, I have the 131 to 148, which is in line with what you're talking about as well. But most importantly, I don't know if y'all can see this, but all the red flags that I had. And this is a conversation I think we had with Mark Monroe. The one like, why would China push Tesla vehicles over its own vehicles over there, NEO, for example, or any of the other Chinese vehicle? Then I mentioned the whole U.S. conflict with China. That was a red flag for me. Germany has the energy issues. That was a red flag for me. The fact that I don't think Tesla's going to be a priority, and just knowing the German culture, because I'm from there and I am German, that we just don't put so much emphasis on luxury vehicles over there. I know everyone thinks that because BMW and Mercedes, everyone's driving that over there. Over there, that's not a luxury vehicle to us. Then I talked about the whole battery and chip challenge that we still have, and then the Twitter deal was an issue, and a Tesla Model 3 now is more expensive than it was last year. And I understand his goal is to lower the prices. He wants to cut the prices. I get that, but in this environment right now, profit means everything. And then the other thing obviously was that there's some tax benefits that haven't been fully established properly yet. And then just it's Elon, man. Elon is I like have such a love and hate relationship with him, but the guy I think he's part of the reason why the company is doing so bad right now, along with the environment. It doesn't help the way he's behaving. Sometimes I feel like he's got this Kanye moment happening right now. That was pretty much it for the Tesla chart that I had. You're muted, Mo.
Sorry, hold on. Let me just quickly go over my notes. I had stock. So okay, so what do you do if you're in? I'm gonna guess a lot of people are in trouble because they bought growth stocks. And I'll
Yes.
take my example. What's the shittiest one I have? I have PayPal.
Well, PayPal's not a growth stock.
No, but
It's,
like I meant like I'm down on it.
oh, okay. I was like,
So,
PayPal is pretty established. It's not like a SoFi or Palantir or Tattoo Chef.
so bro, if anyone bought that, like that's like they know. I was assumed that they knew what they were doing in terms of the risk they took. But if someone bought PayPal, like you said, they would have thought it's established, right? It's
Yes,
not.
yeah,
That's
absolutely.
So yeah, if someone bought Palantir, you could tell the kind of people that own Palantir because every time Mark posts a video about it, people just start calling him out or they get super offensive. So like,
They got a loyal following. But just so everyone knows, I actually bought 10 shares because I'm planning on doing cover calls on it. It's a trade for me. It's not like a long-term investment. But I'm better off than majority of people because people were buying at with the 40s, the 30s, the 20s. And for years, even when I was at the 40s, I was like, y'all, this is not a company you want to invest in at that price. So I bought at $7. So I'm just 10 shares, trying to build up to the 100 so I could do the cover calls, make some money, and then dump it.
So I bought PayPal around this price, around
You want to put the chart up?
200.
Hold on. Want to put the chart up? Want to put the chart up?
Oh, I don't have the chart up. Okay, hold on.
Nope. Here you go. There you go.
So the purple line is where I added it. So now I'm down roughly around, I'd say about 65% on this. And the way I did this was I sold 80% and I let the rest remaining. But let's assume that I'm holding the entire thing at 205. I'm down 70%. One of the ways you can make the money is by doing covered call. I know Mark is doing a whole entire class on covered calls, so you're gonna have to wait for Mark going over that. But essentially, what covered calls is basically you're selling for per contract that you sell, you need to have 100 stocks, and you're basically make passive income on the stocks that you have sitting. And for stocks that are down, that might be a good way of making money.
Yes.
Right, Mark, would you like
Yes.
to add anything?
Yes, but there is some man. So you're down significantly. I don't do that. That's not how I do my cover calls. I try to find super beaten up stocks that are already relatively low because I want them to call the way after a while. But I get what you're saying. So depending on what your cover call is, because the risk to that is that obviously if the price goes above where you sold that cover calls, your shares are going to be sold at that price. But there's so many different ways you could do it. But I get what you're doing because I have a friend actually that she texted me yesterday. She's like, I finally understand cover calls. I'm doing cover calls. And in fact, I think she's also doing it with PayPal or Square. No, she's doing it with Square. She's doing it with Square. But yeah, that is a way for you to try to make some of your money back with your beaten up stock, especially if you have over 100 shares. That's the only downfall. I'm not sure if a lot of people have over 100 shares in like PayPal or Square or anything like that. But with stocks that are under $10, you can actually make some pretty decent money. I've done over $700 so far off of Norwegian Cruise Line, and I've just been rolling that bad boy, and I'm just collecting premiums. And same with I just started a cover call today on Warner Brothers that expires Friday for like $30. It's nothing, but still, there's ways you can do it. But that's smart.
So what I would do is I would look at, and I did that for a couple of them before I got rid of them, like SC and all of them. I would start like from now on, if you guys have some like $40,000 invested in a specific stock, I would start buying puts. So let's take an example. Let's say you have PayPal at 78, and you kind of look at it and you're like, this can go lower. I don't think PayPal got much going on in terms of how low it can go, because a lot of these funds have been consistently getting out of the position. So we haven't seen what we call capitulation. So I wouldn't say go buy $50 puts right now, because it's already down from 300. Can it go lower? Yeah, like UPSD from 500 to 14 now. So what I would do is I would trade the stock to make money. One way is covered call that Mark, but Mark does it on stuff that is less riskier. PayPal probably be a little bit more risky for you guys. So what I would look is I would look for demand zones. I'm looking at weekly right now, and I would look at demand zones, and I'll tell you why. Sorry, supply zone. And the reason why I would look at these supply zones is we will get a short squeeze. Every time we have these puts layered up, there's always a squeeze that comes in, and they usually come in when no one's expecting it. So for what's your, let's see, let me look at the demand zone for PayPal. Let me just go daily. Maybe I'll find something sooner.
If any of you have done cover calls or cash secure puts, throw one in the chat.
All right, so I got 75, 73 level. If we see a bounce on this, I'm looking to buy calls. And if we go at 70, then I'm also looking to buy calls on it on a bounce. It needs to break above it. That's one way of doing it. The other way of doing it is if you're buying fresh stocks, because there's not much you can do if you're already down from 300 to 78. Now just piling up on puts could increase your losses, so you have to trade it systematically. Now let's say you're not someone who's a trader, you're just a full-time investor, and this is going to be your first buy. What I would do is for every 100 stocks, I would look at buying puts as a protection. So and I would look a year out put. I wouldn't look like a month put, because I would assume that you're not a trader, and I would like to add puts on supply. That's what I would do if I was you guys.
Yeah, and another, I don't know, cash secure puts, if anyone's familiar with that as well. That's not a bad method if you have a lot of money on the sidelines, right? So let's say, for example, you guys want to buy 100 shares at Apple at 109. You can start doing cash secure puts and start collecting premium until it get there. But just understand that once it does get to 109, you will most likely be forced to buy those shares, those 100 shares. So, and your money would be tied up. So you will actually need the amount of money that it costs to buy the 109 shares of Apple, for example. But so the downside to that, of course, is like, let's say Apple hits 105, you have to buy the shares at 109 or 110 or whatever the option premium is at that price, probably 110. So those are things that you can think about, and there's ways that you can make money. And I wish I had honestly known about that years ago. The best way to think of it, at least the way I'm doing it with cash secure puts and cover calls work well in a bear market. Cash secure puts work well in a bullish market for you just to collect premium, that is. So that's my 2 cents.
Another thing that I'm doing is, let's say if I was going to buy Apple stocks, and I was like, I'm going to buy a big amount, not dollar cost averaging, I would look at where the biggest flow is ending. So if the biggest flow is ending at 120, that would be my price range where I would start buying. I wouldn't just blindly buy it because it's 135 is the demand zone. So if you look at the Apple chart, let me add. So this is the weekly 200, and it's sitting at 109.
Oh, so Mo was sick, by the way, y'all. Just so you know. Uh, Hopefully he didn't just pass out and I gotta do the show by myself. But I'm assuming he's got a really nasty cough, man. Me and him been getting sick quite a bit. But get prepared. Like if you guys have any levels that you're interested in, for me to pull up just to take a look to see where good levels are to buy at, let me know. Just to start getting it prepared to drop it in the chat. So Mo should be coming back here shortly. Hopefully he didn't throw up or something. There he is. How you feeling? You're muted.
You're gonna have to cover Apple. Give me a minute.
There,
I'll grab
there
water.
you go. All right. So the levels. Let me go. Let me go see if let me pull up my chart again real quick to show you guys Apple. I think I have it actually charted out as well. Actually, in fact, I do. Look at that. All right, perfect. So if you guys can see that this is also on the monthly, this is where I created the levels for Apple. Right now, we're getting to a crucial level, which is a demand zone that I have between $122 and $132 on a monthly. So clearly, if it breaks that, the actual next level that I see is 108. And if you look at the 108 level, especially if you go into like the weekly, for example, you'll get a little bit more detail on it. This happens to also be where the 0.61 fib line is, which a lot of people know that's a very crucial level where things will usually bounce off of and go back to the upside. But if that doesn't hold, legit, and I know this sounds crazy, and I know people are like, it's never going to make that. I honestly, I don't think it's going to make it this low. But if it doesn't hold that 108 range and it breaks below the $100, Apple's going back to $54 to $70. That's literally where it's going to land. I think the market has to really sell off for it to get down to that point. But like I was just saying earlier, let's say you're comfortable with buying 100 shares of Apple at 108. Think about doing a cash secure put. I wonder if I could show you. No, I have to like pull up my account. I don't have anything prepared here right now, so I could show you how the premium is. Actually, let me pull this up on my phone real fast. I can give you guys an example of like what you can collect if you want to literally drop 100. I mean, buy 100 shares on the spot at 108. You can actually do a cash secure put right now, and the premium that you can get. Let's say you believe that by January 23 that Apple is going to get to 108. You can collect a premium. It's probably not a lot since Apple hasn't really sold off below 130 yet, but you can actually collect a premium of $121 per 100 contracts that you want to buy in a cash secure put. So that's just, I mean, it's small money, but really you got to think about the bigger picture of the compound, right? It's a compound effect, stacking up, stacking up, stacking up, and it's low risk. That's the big picture. It's low risk, especially in this type of environment. How you feeling, Mo? You feeling better?
Yeah, I'm a little bit better. So the COVID low is $80 for Apple.
For Apple, yeah. Here, go back to your chart. There you go.
So that's the level I'm looking at, 81.21. I'll probably be looking to add around 109. I won't touch it before that.
The COVID level. Now I have for the COVID level on March on Apple. Yeah, I
Yeah,
have, dude. I have June March 20th. I have $52.
I'm looking at the high for the year, kind of.
Oh, the high. Oh, okay. Yeah. It's $80. Yeah. So before the quick sell off, you mean like right there where it was? Yeah, $80. Yeah.
Yeah, I look for where the sell-off happened, not like March.
Not the bottom, yeah, because that was an anomaly, right? It was sold off
Yeah.
because of the news, so all of a sudden it just went right down. I know Jarrell's like, man, all this bear talk, but it's
I know.
real. The thing is, it's real because I know, like, look, I'm telling everyone who's watching right now, look, I didn't believe it either. Look, I met Mo last year. We've become good friends, but he literally told me, and I wish I had listened to him. He told me last year, November, dude, stop buying. And I was like, yeah. I kept buying Facebook. I kept buying Square. I kept buying Roblox. And I think we talked about this 2 episodes ago, maybe when Mark was on there, and I said I've never taken a massive L in any stock yet, right? I think I said that on this show. Y'all, I sold my Square and I took the biggest L that I've ever taken in selling stocks because once you sell is when you really take the L, right? And I also sold out of my Roblox today and took a L. Not as bad because I actually came back a little bit. And I'm still holding my bag holder for Meta at this point. I refuse to let go of Meta right now because I do think 10 years from that down the line it may be okay. But the Square, it hurt. And had I just listened to Mo, which again, looking back at some of these CNBC reviews, not reviews, but the news, they were telling us, yo, it's going to get ugly. It's going to get ugly. This was back last year, November, and we all ignored it. We all ignored it because they always say, oh, the news is just spreading fear. I mean, it's true, but Mo literally told me, dude, stop buying. And I didn't listen because of that. I lost money. Now, when you guys see me buying, I'm nibbling. It's like 2 shares here, 3 shares there. Like I'll cover it on my channel so you guys can see. I'm not doing massive buys like I was before. And it sucks because I could have at least minimized my L, especially with Square and Roblox, but I didn't listen. All yours. You're muted again.
I wanted to show them something. Give me 1 second. Hold on.
Yeah, Danny's like, yeah, Kramer cried. Yeah, he did cry.
Okay. So, can you see the screen, Mark?
Yes, I can see.
I send this message to my mentor on September 30th.
Pull it up a little bit more. Make it a little bit bigger. Can you like expand it a bit so people can see? There we go.
Fuck. So I won't be able to read it. If you want to read it, my throat's done.
This may sound crazy, but after reading the book and the reference to 1987, it seems like we are in a similar environment. Over-evaluation, inflation, buybacks, government lending to spend, and reckless debt borrowing. I feel that the interest rates will go up, which will cause a recession, but that will take time. However, in the near future, companies that are overvalue hyper growth will go down substantially, like in the next 6 months. Would love to hear your input on it.
So and what he did was he sent me the chart for seasonality, basically saying that this is normal. And then when I saw in October-ish or November, Congress selling their stocks, that's when I had the red alarm go off, because the book is called Market Wizard. And if you just listen to the book, forget about what's happening in the market, and there's stuff that they mentioned that was happening right then, right before the recession. And so I was just writing down all the red flags. And so I feel like a lot of people on Twitter that are new to trading like us, they listen to people that have only been through limited experience. But when you listen to people that have been trading for 25, 30 years, or read books that talk about different eras, even if you read the book called Psychology of Money, that simply tells you the only way you're going to know how to trade is if you've traded in that specific market. We've only traded in a bull market. So all of us were like, NIO's going to 100, ARK's going to infinity, Tesla's going to moon. And when this happened, none of us knew what was happening because we've never actually experienced a bear market. And the people that most people look up to, most of them got into options recently or never really traded stocks like how we trade now. And they have no clue. So what they were doing was buy the dip, right?
Yes, and to be clear, no one's saying so. Everything, like our analysis, majority of the time, we want to be very clear. Our analysis is not for 5 to 10 years from now. All right, so we know that the market's going to go up 5 to 10 years from now. We all know that. We're just talking about right now, in the near future. To me, the near future is within at least now until the end of 2023. Do you agree, Mo?
Yeah.
You're muted. Yep. Okay. Yeah. So that's where most of our analysis, what we're talking about, is between now and 2023. We're not talking about 2025, 2030. We know the market always goes up. So it's just a matter of like, how much pain do you want to sit through in the environment? Do you want to buy a falling knife or do you want to just chill and wait for the market to really pivot to still getting relatively low without that massive pain? That's the best way I want to describe it, because everyone has different styles. I mean, literally, it doesn't matter who you watch. If you can go online, there's a bunch of YouTubers. Everyone has their own thesis. Everyone has their own opinion on where the market's going to go. Everyone has their own experience. Everyone has different risk tolerance. So we are just our opinions for the most part align relatively close, me and Mo. But it took some time. Like I am a baby trader. It took time for me to understand that I need to kind of wake up and go with the flow of the market and not fight the Fed, not fight inflation, not fight interest rate, not fight Elon Musk when he's making bad decisions. So
See, my thing is, Mark, if someone tells you to buy something without telling you what happens if they're wrong, I wouldn't take that advice. It's like when you get into a business, a job, what's your exit strategy, right? When you get into a trade and options, we have an exit strategy. I think if you're in something, we're in the T.W.A.D stocks right now, right? We added, I think, around 25. My exit's at 20. You have to have that, in my opinion.
mhm. Yeah, it's better taking a baby L than a big L for sure. Now, Mo, do you have anything else you want to cover to try to help people? So we talked about what you would do is like, for example, cover calls, right? My question to you is like, I know a lot of people get really enticed by some of these low prices for stocks that were at like the all-time high. For example, Facebook. We talked about Facebook, and it was below $100 a couple of days ago. We see Microsoft going down to $200. We see Apple dropping. We see Tesla dropping. What is your recommendation overall, just to put your money to the sidelines and just chill?
So I'll since we can recommend, we will talk about what me and you will be doing, like what we're actively doing. I would personally hold cash and then watch the Fed, see what they're doing. You're gonna see rallies come in, 300, 400, 500 points rally can happen. Eventually, if the Fed isn't pivoting, I wouldn't buy anything.
Now, would you say that when these rallies do come, that it's okay to buy, but then sell and take profit?
Depends your goal. If you're trying to trade, like I think last call we were talking about Meta. I said Meta is not a bad buy under 100, right?
Mhm,
It
mhm.
depends. But it depends on what your goal is and how involved you're in the market. If you work a 9 to 5 and you can only check the market once a week, I don't recommend trading personally. I feel like there's so much, man. If I take a day off, sometimes I feel like I've missed a week and it takes me another day to catch up. So it's a very difficult market to trade. So investors, if you're dollar cost averaging, cool. But if you're actually looking to buy the dip, I'd be very, very cautious because whatever happened to crypto, if that comes or leaks into equity, imagine you bank from, let's say Bank of America or something, some other bank, which can go bankrupt. What happens then? And what happens if 2008 repeats itself, but it happens in a different form? Will you have cash? A lot of people think they have the emergency fund because they're using the same formula they were using in 2020. But with inflation and our increased lifestyle, I don't think the number is the same anymore. I know mine isn't the same anymore.
Okay. And so my advice is very similar, basically what Mo was saying. Have majority of your money sitting on the line and chart out your favorite stocks. I recommend this though. This is for investors, okay? Get off of YouTube, except my channel. Just keep tuning in mine. I'm joking. No, but seriously, tune into mine. But when it comes to investing, don't go for the hype stocks that you see on YouTube. I can give you a little cheat code here. A lot of these hype stocks that you see a lot of YouTubers talking about is because the algorithm does really well on YouTube with those and they push your content forward. And all of us are content creators and we want to make money in this space. So it makes sense to talk about some of these weird stocks that you wouldn't think should be up so high. Like, I give Palantir for example. I know there's a huge community of Palantir, but the reason why Palantir does so well is because the algorithm really likes it for some reason, and people and there's a community behind it. And people are watching consistently, so they will always put that in front of you, and you think that this is a stock that's going to skyrocket to 10x. And what did we see? We went from $40 to $70. I mean, $40 to $7. I would say this: look up some stocks that are not super popular. A lot of people missed Coca-Cola because it's boring. Kroger because it's boring. Hershey Chocolate because it's boring. WWE because it's just a wrestling company. Look at all those stocks I just mentioned. They're beating the market significantly. They didn't even drop this entire time. Hershey chocolate was, I wish I had bought it 2 years ago, to be honest. Same thing with like Berkshire. That's the only stock in my portfolio right now that's up. It did take a beating, but it went up. And you can go on this app called Simply Wall Street. It's completely free. You can look up 20 stocks for free every single month. Go look at it and see like what their debt is. Look at what their PE ratio is. Look how they compare to other companies within that sector. Just explore and find companies that have proven that they do well in all types of environment. I would personally recommend staying away from any company that is not profitable right now. I love CrowdStrike. I think CrowdStrike is a great company. Unfortunately, it's uh it's not profitable right now. It is not profitable and it's at such an enticing price at 120. I've been waiting for this price, but in the environment that we're in right now, it's not catered towards companies that are not profitable right now. So you have to be careful. Look at these earnings calls, right? Look at what happened to Disney. By the way, I did buy Disney at 88. It hit my demand zone, like I called it. And now I think it bounced up. But look at Disney. Look at these earnings calls. Sit in and actually open up the financials and take a look at it and see if they're doing better year over year or are they regressing. Don't ignore the red flags. Too many people fall in love with companies and they ignore the red flags. There's a reason why Nvidia dropped significantly. There's a reason why AMD dropped significantly. There's a reason why Netflix went from $700 to $160. There's a reason why Meta dropped. Like all these companies dropped for a reason. It's not just, oh, it's the environment. But there's companies that did perfectly well, like I just said, Coca-Cola, Kroger, Hershey, Procter and Gamble is doing relatively good, and that's another company I'm eyeing right now. I wish it would go to 100, but there's so many other companies out there that you can find that are not in the spotlight. Tech is getting beat up quite a bit. Yes, tech is the future. Yes, tech will bounce back. But I'm also not in agreement with when everybody always says, you know, everything's going to bounce back in the future. It just is not a .com, right? It's not a .com bubble. But I did some research and I saw a lot of companies that are still around, by the ways, that have never got back to their all-time high from the .com bubble. So I should tell you something. There is a good possibility that some of these companies will disappear. They will be gone. They won't hit the all-time high anymore. Robinhood will not go to its all-time high. Peloton probably will not go back over $100. Zoom will probably not go to where it was before. Like you have to be careful. These ARKK stocks and these speculative plays and these companies are not profitable. Like look at what happened to Twilio. My God, that Twilio dropped what 30% in a day. I don't know where it's at now. Snapchat dropped significantly too. All these companies, they have to be profitable. Think about companies that have a dividend, a long run dividend that's been relatively stable. Look at a company that's profitable. Look at a company that's established. Look at their cash flow and pay attention to their earnings call. Those are things you have to look at. PE ratios matter. Valuations matter. The story is great, but in the end of the day, when a bear market happens like it does right now, there's a reason why some stocks are only down 10% and others are down 90% or 80% or 70%. We cannot ignore the red flags, no matter how much you love the company. I love Square. I did. It's not JP Morgan. So I sold. That's my 2 cents. I hope that helped, folks. But it's called Simply Wall Street, completely free. So, well, got anything else?
That's it for me.
All right. Well, everybody, real quick before, I just want to make sure, are there any levels or anything that you guys wanted to kind of get an idea, like where is a good buy zone? If so, please drop it in the chat right now. I don't know if the chat's even active. Let me double check over here.
Oh, it's active.
Oh, it is? Okay. Yeah. Let me know. I give it like 1 minute before we bounce. That way I give everyone a good chance to kind of drop whatever they need to drop in the chat. But other than that, man, it's been crazy. It's been a crazy week. Mo, which was interesting. I saw that yesterday during the elections, pre the elections. I asked you, yo, are you planning on doing any calls or puts? And you said, no, man, I'm going cash end of the day, because you weren't sure what was going to happen, right? Because I think historically the market usually jumps up, but that didn't happen. It didn't happen. It actually did the opposite. So, okay. All right, cool. So one NVIDIA. I think I might actually have NVIDIA. Hold on. Let me share my screen again. I think I have that plotted as well. All right, let me pull it up. Can you see it, Mo? My screen still? Okay.
Yeah.
Oh, yes, I do. I do have it plotted. Perfect. All right. If I expand it, can you still see my screen?
Yeah.
Okay. So on the weekly demand, what I have for NVIDIA is $98.23 to $102.81. There was I had this red mark here. So this must have been a key support level at one point, but it broke through it and it became resistance, but now it broke above it. So I don't have anything to the upside. I think looking at this, I think it's going to go back down. Look for $98.23 to $102 for a good entry point. Just to be very transparent with everybody, I sold all my NVIDIA shares for profit, as well as my AMD. I actually took a small loss on my AMD because I bought it at 72 and then I bought at 58. And then when it went up, I sold it for a small little loss. I recommend the chip sector be very careful. If you want to get into chips, just look at the ETFs instead, in my personal opinion. They're too volatile right now. Anything else? Anyone put anything else in there?
Yeah. So the pre-pandemic for Nvidia is 79.29. I'm gonna be watching these levels very closely. I'm gonna have alerts there because look, Meta is already way below its pre-pandemic. So I think every company will hit it. Apple will be the last one to hit it though. Like you could see the strength of Apple. Tesla, however, I think Elon is still selling. So this thing sees low very fast. I think he needs more money for funding, especially after the whole crypto thing. Some regulations will come on how you manage other people's money, and in this case Twitter's private, but there's still other funds that have invested in it.
Yeah, you say you have you see I have a yellow line actually there near the 70s like you're saying. That was actually my strong support level, and I'm assuming that's what a pandemic is, right? I have 70.95 is what I have if it breaks this demand zone, which is
Yeah,
$98.23. So again, it's demand zones, nibble. Okay, when I say nibble, if you guys are you have FOMO and you like, yo, I got to put a little bit money in, like, $400 or $500 maybe. Don't do thousands of dollars. Don't do thousands of dollars. Don't get caught in that. Just be patient. I saw someone say AMD. Do you guys want me to do AMD real quick? I think I have that charted as well from a while back. Let me go see what you got. AMD. Okay. It's actually near demand again. It actually bounced off the bottom of close to the demand I have. I have on a weekly, I have $52.17 to $56.83. I wouldn't buy anywhere. And then it looks like the next level is $30.79. Is that what you have?
Yeah, I'm just marking the low of the demand. It's 59.80. That breaks. The next low I have is 42.08, and I think that should hold. But if that breaks, I've got 38.78.
Okay, yeah. So our levels are relatively close, Mo, to each other. So there, you guys have an idea. Again, save this episode if you guys ever want to refer back. I also did a whole episode on my channel called Trading with a Dummy, where I went over 21 stocks that people asked me to review to give price predictions. Again, these are not guaranteed, all right? When the level breaks on the demand, that demand is no longer valid, right, Mo? Because you're like really good with that. Support and resistance are different. They usually always remain. Supply and demand, once it breaks, it's no longer valid. Look for the next demand zone or the support and resistance zone. Also, everybody, Mo, you have some news you want to share with everybody. You got 20 people in here. Share it.
So yeah, one of the things me and Mark have consistently been working on is creating more content for you guys. So I started my own YouTube, and I'll be posting weekly, like maybe plays, whatever. I'm not sure right now, but I'll see what you guys are looking for. I think we have a very different approach on how we look at things, so it will benefit a lot of people. And again, there will be no paywall behind it. It will just be free for people. Is it too late to buy put leaves? So yes and no, depending on what stock you're looking at, right? Like we just went over Goldman Sachs, right? Look at where it's at. But then now you say, can I buy put leap on PayPal? What's your risk to reward? That's the stuff you want to look at. If you want to do really well in terms of plays, look for technicals, which most of you guys know how to do. Then the biggest one is look for flow. If the flow matches your what do I say? If the flow matches your thesis, then that becomes a high. I don't want to say probability, but it's a high risk reward trade as long you're taking it closer to the demand or supply. If you're taking in the middle of the zones, I wouldn't take it even if the flow was good, but add flow. So I'll give you a couple of flow. Tesla 15 million came for Jan 150. Apple came for 120 for April. Microsoft came for February for 200. So
Sorry,
look
say
for
that again,
flow.
Mo, so I could put it in chat. Tesla,
Okay. So
15 million.
Tesla was 15 million, 15 million for Jan 150. And Apple came for 120 April. And then Microsoft came today, which is probably I think my favorite play right now because it came today. They the first sweep came for 7.3 million. Then they bought more at 7 million, and that's for 200 for February.
Okay. Well, there you guys go. Do you guys have any other questions? Like literally, we wanted this episode to be special. We were here to answer any questions that y'all may have. Obviously, our episodes are usually 30 minutes, but we went over an hour because we wanted to make sure that we can try to help y'all out as much as possible. So do you guys have any other questions? Just make sure. All right. I think we are good because I know sometimes it's a little delayed on YouTube, but I think we are good, Mo.
All right.
Wait, hold on. Someone says yes. They have questions. What is it, Sarah? How are you? So, all right. What stocks going back to COVID levels? What does that mean for indexes? You're pretty consistent with indexes, Mo. You want to answer that one?
Yeah, so 3,200 and then 2,900 are the two levels I have. Let's just quickly do a pre-pandemic level on 3,386 is the level. 3,400. We're gonna go way lower because growth stocks or any other stocks that are part of the indexes, they're way below the pre-pandemic level. So the indexes will go lower, and because Powell is telling you that he's going to over tighten, they're going to pull more money out. So I think you should see the twos on SPX.
Okay. And I see Finding Superman, which is more important with options, fundamentals or technicals? Well, it depends what you're doing. If you're doing long-term options trading like leaps and stuff, it's a combination of both. When it comes to day trading, it's technicals, right, Mo?
Yeah, depending on what do you call fundamental? Like I call news fundamental. So when news, if you count news, then news take over technical analysis. But if you're talking about fundamentals, like the health of the company, it doesn't really matter. Look at Nikola Motors; they didn't even have a proper truck to run. They were going up, I think it was $100. So and people knew they didn't have a product. So technicals are superior in that regard. But if you put news in, news beats technical every day.
Yeah, and I think we talked about this. We spoke with Mark about this, the other Mark Monroe, because we always kind of refer to him as actually an investor. He's more of a trader too. He just does leaps, like long-term trades. So he's a trader too. But I would say I think from what I recall, he does focus a little bit on the fundamentals, the story a lot, and technicals. I lean more. Well, I don't do leaps anymore or anything like that. So it's technicals. When it comes to me finding my levels for investment purposes, I go out to the weekly, the monthly, and I do my technicals, but fundamentals matter whether or not I actually get in at that price. That's why like a lot of these demand zones that my charts hit, I'm only nibbling because fundamentally we're in a terrible environment right now. So it doesn't make sense for me to go heavy. I just get in then just in case the market reverses because we can never time the bottom. So once it hits that level, I buy a little bit. If it goes a little bit lower, I can risk that. But if you don't have money that you're okay with losing, don't buy. So I hope that helps. All right. Well, Mo's dying. His fault. I'm sorry. I keep extending this episode and stuff. So no worries. Yep. Well, everyone, listen again. Thank you so much. Make sure you follow Mo's new YouTube channel. It's about time, Mo. I'm glad you're doing this. Expect to see some major growth on his channel and the knowledge he's going to drop. You guys already know my channel, Trading with a Dummy, is mostly entertainment with a little bit of like education to it. But Mo is the brains here. I'm more like the entertainer, I guess, realistically. So until next week, y'all, we're going to be back on Tuesday. 6 p.m. The only reason why we postponed this was because of election yesterday. I know everyone's probably going to focus on election and stuff and not the stock market. So until next time, everybody, we appreciate you guys tuning in. Thank you so much. Remember, share, spread the word. We really appreciate any support. See you guys next week. Peace out.